Hey everyone, today I'm going to talk about why it's better to buy versus rent in the Toronto market specifically. Of course, there's an ongoing debate on whether it's better to buy or to rent, and both sides have valid arguments. Both sides can be correct depending on the situation. There are a lot of videos out there that tell you to rent because renting is cheaper and you don't have to tie up a lot of your money in the down payment, and you can invest it instead in the financial markets such as stocks, bonds, ETFs, mutual funds. But of course, I think this is very high risk, high reward. How many people have you heard made millions off the stock market? And how many have you heard went bankrupt because of the stock market? Of course, this is completely dependent on you and your knowledge of the stock markets and investing. I would not recommend someone do something that they are not knowledgeable about just because somebody else told them to do so. And also on how much risk you are willing to take. Real estate is a more safer investment. Real estate gives people a peace of mind because it is a physical asset that they are acquiring. In finance, there is something called opportunity cost. Opportunity cost is a potential loss and gain if an alternative option was taken. And you can see this just a few months ago when the pandemic occurred and what happened between the housing market and the financial market. There was a huge crash in the financial market. Lots of the indexes like the SP 500, Dow Jones, they lost over half their value. And in the housing market, all it did was stop inflation. We were seeing tremendous inflation in the housing market in January, February, until the middle of March when the lockdown happened. We were seeing multiple offers. I saw a house that had 48 offers on it and went $150,000 over ask. Because of the lockdown and the pandemic, this inflation stopped, and instead, all the houses usually sold for list or just a little bit below it. And now in June, only a few months after the pandemic and lockdown, housing prices are starting to go back up. So you can see the riskiness between the financial market and the housing market. In the financial market, if something big happens like this, you can lose almost all your money. But in the housing market, it's impossible for your house to go to zero. This is because people have essential needs. Essential needs is a roof over your head. That means that people will always need housing. This is especially prominent in Toronto because we have a high demand for housing, but unfortunately our supply of housing is not there. And this unfortunately just drives up the prices. This allows the housing market as an investment to be a very safe and secure and hopefully profitable investment for you to make. And that's why I recommend, if you have the opportunity, to buy a house instead of renting it, especially if you live in Toronto and the surrounding cities. And now I'm going to show you some market stats collected by the Toronto Real Estate Board.
So these are historic market statistics that are recorded by the Toronto Real Estate Board. This is pretty much the board that governs all real estate transactions within Toronto and the surrounding cities. And they are in partnerships with other real estate boards that are specific to each municipality or region. So this covers multiple regions from the Dufferin region, Durham, Peel, Halton, Simcoe, Toronto, and York. Over the past 5 years, the average price of homes have increased significantly due to appreciation and inflation. So this chart in particular shows the average price over the past 5 years. In 2015, you can see that the average price for homes was about $600,000, like just above it. And skip 5 years, in 2020, it's about $900,000. Homes are not getting turned over as much as in the past because people tend to hold them longer or see them as long-term investment properties. This is why the new listings have dropped from over 150,000 to just about 50,000. So that's almost a third of what it originally was.
Of course, as you've seen in the average price of homes, it's not always going up, 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 up. There are ups and downs, but at the end of the day, if you do hold your property investments, even when prices go down, they will eventually go back up. Like this was seen in 2017 when the government introduced more taxes and more rules and regulations to mortgage lenders. This made it harder for people to borrow, and people got qualified for lower amounts, which means that they weren't able to afford homes that were too expensive anymore. This caused a tremendous drop in house prices in the year of 2017, just because there were not enough buyers compared to sellers. Since the prices were high and buyers, they just couldn't afford it because of the new mortgage rules. But the Toronto real estate market is resilient. As soon as 2008 hit, prices kept going up and they're still going up. One thing that people actually might bring up is the 2008 housing market crash, where a lot of people went through foreclosure, they lost their homes, they lost their jobs. But what people don't really remember is that this happened in the USA. It didn't really happen in Canada. During this period of times, banks and lenders in the USA, they were giving mortgages to anyone, even people who were unqualified for those mortgages. People working minimum wage jobs were getting approved for $100,000 mortgages to buy homes that they could not afford, they could not pay the monthly payment. So of course, once the economy went south, there's a lot of people that defaulted, there was a lot of foreclosures, the real estate bubble popped, the housing market dramatically crashed. But here in Canada, we have stricter laws and regulations regarding mortgages. That's why we weren't hit as hard as the USA when it came to the real estate market crash. There were many countries that looked towards Canada's and our mortgage rules and regulations as to why it did not affect us that badly. I would say that an average return of 8% a year is very good for your investment, even if you take into account the interest payments that you have to make. Because right now, as of June 2020, the average interest for a closed mortgage is at around 2%. That means after interest, you would be seeing an average return of 6% a year. And not to mention that every month you're paying off your mortgage, your debt. So that means you're building equity on your home, and the equity that you built upon the home, you can use for another mortgage to purchase more properties in the future as an investment. And these future properties can not only appreciate in value, earning you money that way, but you can also earn rental income in the process. That's why I believe it's way better to buy over rent, especially in the Toronto market. And if you're looking to buy, rent, or sell your property, feel free to contact me. All my contact information is down below. And I recently created a new website which has awesome search features for you. There are amazing filtering options and there are thousands of listings just waiting for you. So visit my website. It's samuelsujanto.royallepage.ca. I'll leave it down in the description below. If you have any questions, please leave a comment down below. Thank you so much for watching. If you did like it, please like and subscribe.